Evening, everybody. I'd like to just take you through a few slides on BlueRock diamonds rather than oil. So just by way of a little bit of background, there aren't many diamond assets in South Africa, and certainly not in the Northern Cape, that are relatively virgin, certainly in terms of kimberlite assets. Brief history is this asset that we're mining was originally discovered by De Beers in the late 80s, early 90s. De Beers sat on it for a number of years. They then lost the license on the basis that they hadn't mined it. It was then looked at by an Australian company called Tawana Resources. They sat on it for a while. They didn't mine it. We looked at it in 2013, and we're skeptical as to why the mighty De Beers had walked away, why Tawana had walked away. They're, in kimberlite terms, they're relatively small pipes, and also in terms of the grade on the pipes, they're relatively low. So there was a degree of skepticism and concern about the start of the process, but the reason for the interest in the asset was the likely unknown, or the unknown at the time, which was the quality of the diamonds. I think any work that had been done on the asset prior to our arrival had assumed around about a $70 to $80 per carat value of the diamonds in the ground. When we started our trial mining, the small production that we mined during trial mining came out at about $140 a carat. Further on from that, we mined further production, and the inferred resource in terms of dollar per carat went up to 230, and it was restated back in January of this year at $323 or $322 a carat. So the big encouraging long-term news for our asset is primarily the quality of the goods in the ground. So we're based in the Northern Cape, not far from Finch Mine, not far from Koffiefontein. We have been producing since 2015. We had two difficult years, 2015 and 2016. There was quite a significant management change in 2016. We started back again in March 2017, and we've been producing since March 2017. So the mining license area covers 3,000 hectares. We've got 5 pipes, which I'll come on to in a bit. The 3 pipes that are the largest of the 3 have all got grades between 4 and 6 carats per 100 tons. And just to make sure we're on the same page on this, the grade is all to do with the quantity of diamonds as opposed to the quality of diamonds. So the grade is the number of carats that you will mine per 100 tons of ore that you take out of the ground. We're modeling down to open pit of 100 meters. We have a fairly small operation, 50 people employed at the mine. We run 24 hours a day. We've just moved on to contops, and we are mining now through 7 days a week. So the basic operation in terms of our operations at Korea Flay are fairly well described here. So we start with drilling and blasting. That service is currently outsourced. We pay rand per ton for our ore that's blasted, and we pay rand per ton for our waste that's blasted. We also contract out the loading and hauling. Currently our deepest pit is down to about 30 meters, so it's a relatively easy haul at this stage. So those 2 services are outsourced. We then go on to the crushing circuit, where we load run-of-mine material into the tip bin there. It goes through the jaw crusher, secondary crushing, and then into the processing plant. That currently is managed by ourselves. And that's one area that we're looking at quite closely. I think those that have followed the BlueRock story will know that we've had frustrations with our crushing circuit. Primary crushing is pretty straightforward. That just takes material down from 400 or 500 mil, so about that size, and it crushes it down to 75 mil, which is about that size. That's not a problem for us, plenty of capacity there. But the secondary crushing, which is a little bit more difficult, you need to make sure that you're liberating the diamonds but not breaking diamonds, and that area is an area that we've had problems with in the past and continue to assess. So this is the minus 18 material here, coming from the crushing plant. We do have an option of a closed circuit plant feeding straight through from the beginning of the process right through to the pans and the DMS plant in this area here. But we also have the ability to crush out material there. And obviously the diamond sales and the marketing is completely retained by ourselves. We tend to sell at tender. We have 3 different tender houses we use currently, 2 in Joburg and 1 in Kimberley. And we're also talking to Antwerp tender houses as well. I just want to spend a little bit of time on this. This resource is currently an inferred resource. Although we've been mining for a while, we did update the resource statement at the end of last year. And I think it's just worth pointing out that we are still very, very early in our development of the assets. 3% of the inferred resource is currently being mined. We're currently mining those 2 kimberlites in the middle, K1 and K2. Kimberlites being, in effect, volcanoes, so that the ore body is a defined ore body. We know where the ore body is. Outside the ore body, you're in non-diamond bearing material, and inside you are. And it's pretty simple. You just need to make sure you're putting kimberlite through the plant, and then you get the diamonds. We have a small pipe K5 at the top where we've done some bulk sampling work. That has a much higher dollar per carat and a correspondingly larger stone size. It's small, but we want to do more work on that. We may do more work on that during the course of this year. And the potential in-ground value of those 5 pipes is circa $100 million. That's based on the inferred resource on that slide there, 7.7 million tons, and our current dollar per carat, which is about $327 a carat. That's the layout of the mine. K2 in the middle, K1 at the top. This is the big pipe here, K3, which we haven't started mining yet. K5 at the top, and then K4 is a little satellite to K1, probably attached to K1. Just want to spend a little bit of time on the grade, because obviously the grade is absolutely vital. We've just done here a little explanation. So assuming 400,000 tons a year that we put through the plant, which, by the way, we're not doing yet, but that's our aspiration. There is no different cost of production on a varying grade. So whether it's 2 CPHT or 5 CPHT, the costs don't change at all. If we mined 400,000 tons at 4 CPHT, we would have revenues at the current dollar per carat of about 5.2 million. At 2 CPHT, it's 2.6 million. So it is very, very important that you're mining ore. This is a cross-section of K2 where we spent most of the last couple of years mining. And you can see the shaded in area at the top. That's just 2 different cross-sections. Tells you the material that's come out of the pit. So that is the current pit profile, that black line, and on a different cross-section of the same pipe, that black line. And the darker blue stuff is the good stuff, and the lighter stuff is the either waste, which has got no diamonds, or low low grade. And you know, our grades have been lower than pit grade over the course of the last 2 years. They have been steadily improving, but just wanted to point out that there is a very, very good reason why those grades have been low and are improving. I'm pretty comfortable now that we are into good ground on K2 when we start mining that again. We're doing a little bit of blending with K1 and K2 right now, but very comfortable that we're going to get some consistently better grades from that pipe going forward. So this is a picture of K2. Looks a little bit messy, but that's the way it looks at the moment. And you can actually see the lighter material at the top, which is calcretized, or at the very top pure calcrete carrying very, very low grade. And then you get down to this level, which is 10 meters below ground level to 20 meters below ground level. You can see the color changing. That's just wet, forget that. But you can see the color changing from white down to much darker, greeny color down here. And that's the diamond-bearing material down there. So we've got further work we need to do in K2 before we start doing more blasting there. And that further work is basically the sort of relatively dull part, which is all part and parcel of kimberlite mining, which is stripping. So we've got to do more stripping on K2 to get K2 back in a position that we can start mining ore. I'm happy to say expect future mining to be in the region of 4 CPHT because I've been down into this material down here and we've mined material at between 4 and 6 CPHT in the lower levels. And there's nothing in the geology to suggest that those sort of grades won't continue. K1 is where we're focusing at the moment. It was a virgin pipe in April of last year. We've stripped about 340,000 tons of waste. We've mined about 60,000 tons of ore. We've got maybe a little bit smarter at waste stripping now with the benefit of our knowledge on K2, and we're also just blasting a little bit more waste than we did on K2 at the top level. So we got into better grade quicker, and that's obviously encouraging. That will be where we're mining 90% of our material until middle of this year. Then we'll start mining K1 and K2 together. Ultimately, those two pipes will be mined as one with some benefit to strip costs. So we've had, those that have been following the BlueRock story will know that, yes, we're a producer, but we've been loss-making. We were loss-making last year, and it's been tough to get the production where we want. We still have got work to do on the production. One thing that we've been able to fix and will fix right now is just working longer hours. We've been operating 5 days a week. We're going on to a 7-day-a-week operation, so there's a big uplift in availability as a result of that. We still have further work to do on our crushing circuit. We've got a number of options that we're looking at. I mentioned at the beginning that we outsource drilling and blasting, we outsource hauling, and it's something that I'm looking at with my chairman very closely, is the possibility of outsourcing our crushing circuit. For me, that de-risks the production. The difficult part of processing kimberlite is not from when it's minus 18, it's from when it comes out of the ground to get it to minus 18. So if we could outsource that, we would lose some margin, but we would de-risk the operation. That's one option we're looking at. We're also looking at options of doing it ourselves. In the meantime, we're producing as per the last guidance we gave, which was our Q1 is expected to be 35 to 45,000 tons, much lower than our second, third, and fourth quarters due to the rainy period, and we're still on track for that. So generally speaking, 4 to 5 years mining K1 and K2. That would be down to 70 meters. We'll then assess to see how the best way of continuing operations in K1 and K2, probably just continue to go down to 100 meters open pit. We then look at K3 and we start phasing in K3. The grade on K3 is pretty similar to K1 and K2. We don't know an awful lot about the quality in K3, but the small amount of work that was done in the drilling before our time suggested the quality will be as good. Not sure I can say better, but I think it might be a bit better. But anyway, it is no reason to believe it won't be any different in terms of the other resources, bearing in mind they're all within about a quarter of a kilometre of each other. So we've been historically mining at 15,000 tons, and this is the problem that we've had. If you like, the most important thing initially was to say, okay, De Beers walked away from it, Tawana walked away from it. Why did they walk away from? Why are we deciding that we can make money out of it? And it is all about proving up the resource in terms of grade. And strongly believe that we've done that, and I think if anything we are likely to have more positive surprises on that front, and also being comfortable that our quality is enough to sustain the long-term mining, which I think we've comfortably done. So the production is what we need to do. Frankly, it is difficult with a small mining operation. If you're a loss-making mining operation, finance is hard. Coming back to the market is obviously painful and difficult. Being able to get other routes to finance has been difficult. But I think, as we referred to in the statement this morning when we announced that we'd done a fundraising, we're looking at options with much bigger organizations that would consider partnering in certain areas of our operation, and those discussions are ongoing. This is just to give you an idea of our current cost structure. Again, those revenues are based on different grades, but a fixed dollar per carat of $327 per carat. Plant costs are fixed, mining costs are not fixed. And at the moment, our plant costs are a far too high a percentage of our overall costs. If we can reduce the fixed cost element of our operation, that again is where we're targeting and where we're heading. And that's about it. Any questions?
I have a question. That's okay. So obviously we raised money,
yep,
which was announced this morning. Now, obviously, there's a few people out there questioning the timing of the diamond find on Friday. Now, I appreciate we've all been exchanging emails over the weekend to make sure this was announced this morning. Would you like to maybe touch on the timing of the diamond, and obviously, going forward, are we expecting to have even more?
Yeah. Okay.
Of that kind of sizing.
I hope so. Yeah. There's the predictable bits about kimberlite diamond mining is the grade. What we can't predict as easily is the individual size of diamonds. I live in South Africa. I'm personally involved with all of the recovery, which happens once or twice a week. And on Friday at about 2 or 3 o'clock, we recovered significantly more than our previous largest diamond. And in discussions with the Nomad, it was to be announced. And I think I can't make any apologies for that, and exactly the same thing would happen in the future. So as soon as we do recover diamonds which are material to our production, they will be announced. And I think that will be the case going forward. Timing may have been unfortunate, but I'm afraid completely out of my control.
Any other questions?
Thank you for the presentation. You now raised quite a lot of money, what, 307 and almost 6 over the last 12 months. So could you just outline how you're going to utilize that cash? You were supposed to be profitable by December 18, so I guess that hasn't happened yet. And could you please elaborate how you want to be profitable, how you're thinking about reducing the planned costs, and has the management participated in the last round, today's capital increase, and how much does management own today? Thank you.
Okay. Just in terms of management's participation, the last funding was done today at 0.3. The previous funding to that was done in November, and I think 3 of the 4 board members participated in that funding. Nobody participated today, but as I say, in November of last year, we all participated. The answer to profitability is pretty straightforward. The grade is predictable, and our dollar per carat is pretty predictable. So it is all about throughput. There is no other variable. We wouldn't expect to be profitable in the first quarter. It's the rainy season in Kimberley, and our production historically will be significantly lower in the fourth quarter than in the first quarter than the rest of the year. I think we've said that a run rate of 40,000 tons a month at a grade below 3 CPHT gives us profitability. So we would expect that, and certainly our targets are to be achieving that sort of run rate. We've publicly said that in the second half, I think during the course of quarter 3, 2019, we expect to have a run rate of 40,000 tons a month during that quarter. We would still expect that to happen.
Any other questions? Sorry.
I need to know what the weather's like at the moment.
Hot and wet.
Hot and wet. I mean, but it hasn't caused any production holdups.
The mine wasn't running today. As I say, we forecast significantly less production in the first quarter, and there will be rainy days. We are right now having a rainy day, but compared to last year, we've had less rain than we would normally have had, but it's the rainy season.
No floods.
No floods, no.
No biblical, anyway.
No.
Second one, am I to assume that there'll be no further placings this year unless it's for acquisitions?
Well, in the statement that we made today, we talked about looking to spend more money on the crushing circuit. Yeah. We also talked about discussions with industry partners to that end. As I said before, it's a painful business for existing shareholders to be raising money at these sort of levels. So I'm not going to say, no, we won't be raising further money. I can't say that, but I can say that the board is fully aware that we need to look at other options, and we're doing that.
Okay.
You mentioned you got secondary crushing problems, yeah? The spoil, the waste that you got, have you got any contracts to actually sell that on?
No, the waste is, calcitized kimberlite. There is no secondary market for that in our location. It's very nice, regular -18 to 1 millimeter material, but there is no market in 120 kilometers northwest of Kimberley for that sort of material.
As far as labour relations go, have you got any problems whatsoever?
No, we don't have any labour problems. We've got a pretty small labour force. We've got very good relations with our labour, and we have no problems.
Adam, are you able to stay behind afterwards?
Sure.
Also, if it's okay, obviously, Adam, thank you very much.